Hello and welcome to my daily market update. Well, the market fell into the same pattern that is done post that ceasefire announcement day when the markets all rallied about 2 to 4%. This was 2 Fridays ago. And since then, as we have been experiencing, the market has tended to be operating in a range of almost less than 1% up or down. Some days when it's up half a percent, 6.6.8. When it's down, it's down 0.4, 0.5, zero point 0.6. So it's the same pattern today with almost the large, mid, small, micro. All of them were down today in a very narrow range. But so again, if you start looking at reasons for this from a geopolitical perspective, well, Israel and Iran and US are again battle at war, but Brent crude is not reflecting that. Brent crude is still hovering at 72, 73. The dollar index is still at 101.5. The US interest rates are around 4.38, 4.4. Indian interest rates are 6.87. The rupee is hovering about 10, 15, 20 basis points weaker. So there's nothing really dramatic happening despite these news. And the fact is that if you look at the FIIs, they have again 1,300 crores of sales today, and DIS stepped in with 2,500 crores. So the story is like a broken record. It's the same story of a slight bit of selling by FIIs, 500,000 crores, buying a little by DIS, and the market being down again comes down to when you look at the breadth, it's 1,100 stocks up and 1,900 stocks down. So again, it's the needy, the non-institutional domestic players. The volatility index was slightly up today by about 4% at 13.8 or something, right? But clearly the advanced decline ratio and the fact that the broader indices were all negative indicates that the profit booking by the non-institutional domestic players, as I call them, needy, is continuing. And that feature is despite the fact that manufacturing output, industrial output was up 5% today, and electricity consumption was up 9%. So there's good news. The domestic manufacturing engine seems to be functioning. Yes, the monsoon in June has been pretty bad. It's about 43% of the long period average. That's not good news. But IMD today said that over the next 3 to 5 days, they expect the monsoon to make significant progress. But the market has ignored that, even that positive news, because the sectors which got hammered today were the rate sensitive sectors. Both the private sector and the public sector banks were down, realty was down, auto was down, right? Consumer durables were down, consumption was down, anything rate sensitive. So this monsoon being deficient, I think, is hurting the sentiment in terms of the RBI policy. And I think that is what is weighing on the larger set of individual participants, like I said, because DIs are sticking at it, right, to double the purchases that FIs sold. So I think the market is going to continue in this pattern that no amount of news and anything is going to change it dramatically, I feel. And IT was again down because of what I spoke in my detailed video. So clearly, what do we need for the markets to go up? Well, we need the non-institutional domestic investors to stop profit booking and start redeploying those profits they have booked over the last few days back into the market. For that, they are probably waiting for a signal, because the big signal around oil is already come and stabilized. So now it's got to be good news around the monsoon, perhaps. The second thing we need, of course, is a return of the FIIs to a strong buying, and not this flip-flop between 1,000 crores of buying and 1,000 crores of selling, right? No triggers that I can see that can immediately do that, right? So the world is watching the IT players' results in the US, and then our results season start, and obviously IT is going to be a major part of the analyst thought process. But apart from that, it is the monsoon progress, I think, which is going to determine a lot, because in the lead up to the next RBI policy, it's got to be the inflation forecast, right? And on the US Fed side, again, there's nothing special. Like I said, the dollar index and the US interest rates have been fairly stable. So the Brent crude, which has dropped to 72, and obviously the West Texas crude also dropped. So maybe from a Fed perspective, we have to wait for another inflation print in the US to kind of set the inflation expectations lower, so the Fed can come out with perhaps a dovish policy, which could lead to a favorable factor for the emerging market flows, and maybe some of that spillover coming here. Other than that, of course, hoping for bad news with our neighbors like Korea, Taiwan, in terms of the AI. I hate to call it a bubble, but the strong rally in AI which started correcting last week, if that were to repeat and sustain, then perhaps India as a AI hedge will get more. So these are the things which can make the FII flow come in and give a boost to the market. So I think DIs are going to continue this, which is that the days FIIs sell a lot, they're going to buy a lot. The day FIIs sell less, they're going to buy less. And the day FIIs buy somewhat, they are going to be quiet. It's a classic behavioral pattern that we have observed over the last week, 10 days. So in that context, I think the market is in for a stable consolidation zone. There's not likely to be any sharp correction, so you can rest easy on that. But at the same time, I don't expect a sharp bounce back too. So this limit of sector rotation, so all the rate sensitives getting under pressure, that will ease if the monsoon data comes out. So like I said, the next 3 to 5 days, IMD is saying monsoon should show to good advancement, and let's keep our fingers crossed for that, right? With that, I close my discussion today. Look forward to catching up tomorrow with you.